Hi, welcome to the webinar. My name is Alexandra Alvarado. I am AAOA's Marketing Director and Director of Education. We are here with Lauren Lieb from Insurance Hub. She is back with us to give us an update here on fighting rising insurance costs, which, yes, unfortunately, they are still going up, and we are not seeing that change. So we want to address how we can lower these costs potentially and what we can do post-pandemic. Lauren is with Insurance Hub. She's a senior commercial risk advisor. She works with a lot of AAOA members and multifamily owners. And really, she's a source for just getting the right information and getting a good quote on any sort of insurance for your rentals. So she's going to go over quite a few things today. And before we begin that, though, I just want to let you all know that we are recording this as we speak. I'm going to be sending it to you tomorrow, and I'll also be including Lauren's slides, which I'm sure she'll share with me, and Lauren's information as well. So if you did want to go ahead and talk to Lauren about any of your particular insurance needs, you can do that after the webinar. And then we'll also have Q&A as well. So if you have any questions, you can go ahead and put them in the chat or in the Q&A box, and we will get to them at the end of this webinar. It should be about an hour long. We might go over a little bit with Q&A, so stick around. And I'll hand it off to Lauren. Thanks for coming on again.
Thanks, Alexandra. I appreciate it. And hi, everybody. So yes, today we're going to go over how you can fight the rising insurance costs both during and after the pandemic. So first, just a little bit of background about me and the agency. We are based in Atlanta, Georgia. It was established in 1985. We have over 20,000 clients all across the country. We consider ourselves to be a one-stop agency, so not only business insurance, but personal insurance, benefits, bonds, financial services, HR services. Now, I specifically specialize in multifamily and rental dwellings and other lesser risks around the country. The blanket term is habitational, which is an all-encompassing term used for the blanket landlord industry, so everything from single-family rental dwellings to large apartment complexes. So today's objective, we are going to learn about the impact of COVID and other current events such as wildfires, earthquakes, other weather-related claims on the insurance industry. You will get some insight into what you can do to keep your insurance costs down, some low or no cost options, along with some not so low cost options. Some of the questions that will be answered is the pandemic really still affecting my insurance premiums, and why? Why are my insurance costs going up? I haven't filed any claims. What factors that are in my control affect my insurance premiums? And what can I do to keep my insurance costs as low as possible? And like Alexandra said, you will have a chance to ask questions at the end about anything we haven't covered or we have covered today. And you can also reach out to us through the chat function after the webinar to get some more one-on-one advice for your specific situation. And I'll also share my email and phone number at the end as well. So first, most of you have probably noticed that your insurance costs have been increasing. At the present time, COVID has not had a large direct impact on the habitational policy premiums, but regardless, you should still expect to see increases for months and possibly years to come. So why? We'll go over all of these following points in more detail, but here are the main reasons. First, the unprecedented number of claims and lawsuits related to COVID, increase in natural disasters. More claims on habitational properties does mean higher rates for the whole industry. The industry is facing a crackdown on replacement cost guides or building valuations, which is how much your buildings are insured for. The hardening of the insurance market started pre-COVID, but the effects are now amplified now that most landlords and property managers have tighter wallets. There are also carriers leaving the market because of extreme losses in the industry, and that less competition equals higher premiums. Now, the biggest culprit for rising costs at the moment is the huge increase in frequency and severity of natural disasters. Natural disasters such as flooding, severe storms, hurricanes, wildfires, etc. Now, something to keep in mind, business interruption or loss of rents or business income, these are all terms that describe the same thing in this industry, will not cover non-paying tenants due to their inability to pay from COVID. But there are alternative options to help, and we'll go over those in more detail on the next slide. Something we'll also cover at the end, pandemic insurance options are likely to be offered to small businesses in the near future. So we'll go over the status of those offerings as well. So first, loss of rents, business income, alternative options. There aren't a slew of options for standalone loss of rents programs. You likely have your loss of rents or business income covered under your current property insurance policy. The loss of rents coverage that is included in your property policy must follow the same form as property does, meaning for loss of rents to be triggered, there needs to be a covered cause of loss to the property. Covered causes of loss are things like fire, lightning, wind, hail, explosion, etc. So when it comes to the loss of rent or business income covering tenants who are just unable to pay, that does not exist. So you have to look outside of your property policy to find options. Now, a master renter's policy is a great option, especially if you have multiple tenants. It allows you as the landlord to control the renter's insurance. Any type of residential rental dwelling is eligible. This does provide liability coverage for your tenant and also contents coverage for your tenant's belongings. One of the main programs we use does include a $1,000 per residence premises for loss of rents due to skip. So if they skip paying rents, then they can pay out up to $1,000 per unit, not per tenant necessarily. It has to be in one unit. For unexpected vacancies due to tenants who skip out mid-lease, who are deployed, or who are evicted. Now, there are other programs available that let you as the landlord choose how much coverage you want, as $1,000 is certainly not going to be enough for many landlords to cover their rent. You know, if you're in the Midwest, $1,000 might be enough, but if you're on either of the coasts, that's just a drop in the bucket. So there are other options as well. The average cost, because I know that's what everybody cares about, definitely varies depending on the type of coverage you are wanting for your properties. If you're looking outside the main program that includes, the $1,000 a month skipped rent, that is going to be around $15 per person. If you opt to choose your own loss of rents that are above $1,000, you'll pay more. So something to keep in mind, this incurred cost is also something you can build into your rents, so you are not out of pocket for that cost. You can also use it as a marketing technique, saying that it's one less thing for your tenants to have to worry about since you have that covered. Keep in mind, most of these options are still going to come with the standard virus and bacteria exclusion, but the effects and the fallout of any pandemic, losing jobs leading to eviction, should still be covered. All right, so why are my insurance rates going up? I've never had a claim. This is a question I receive a lot, and I'm going to provide you with some insight as to why the rates are increasing. I know it won't change the inevitability that property rates are indeed increasing across the board, but it helps to know why and to learn if there are any steps that you can take to keep your rates as low as possible. So first thing, it's not just you, I promise. Apartment building increases are currently averaging anywhere from 10 to 40% from prior years. Now, I mentioned this earlier, claims due to COVID, even though business income coverage is not covered, there are still lawsuits against carriers for not paying out for business income. So although the general consensus is that most insurance carriers or companies are not paying out for COVID-induced claims because there are virus and bacteria exclusions listed in most policies, even though there have been a few exceptions, the money that was and is still being used to pay to defend themselves still comes from the same place as where all the claim payout money comes from, which is the insurance company. It still costs an insurance company money to defend themselves, even if there isn't a payout for claims, and even if they do win their court cases, which most have. The second is the increase in premises liability claims and the subsequent lawsuits. So trip and falls are the main liability claim that we see. This is one of the types of claims that can generally be avoidable. And I'm not talking about fraudulent claims. There's not much that can be done about those, although installing cameras all around your property would definitely help reduce that likelihood. Investing in exterior cameras is a lot less expensive than having to pay to deal with paying for insurance premiums after a lawsuit and for paying for any sort of lawsuit. Liability lawsuits tend to lag, and they can be delayed by years, forcing insurance carriers to try and plan ahead of time for any impending lawsuits. Now, we live in an extremely litigious country, the #1 in the world, and lawyers do not come cheap. A lot of the money insurance carriers pay out is to attorneys bringing the lawsuits, so it can definitely add up quickly. Now, along with this, please make sure that your property's inspections and any construction is being done by an insured subcontractor, and you're properly checking for any tripping hazards such as cracked pavement or asphalt. A lot of people and landlords focus on the building itself, which of course is important, but the grounds are just as important. So don't forget to check any applicable parking lots and sidewalks. Wobbly stairs, loose railings, all of that needs to be checked for. And again, since liability lawsuits are often delayed by years, this causes concern for profitability for the insurance companies. I've had quite a few clients who have approached me a year or two after the fact saying they had just received a letter from an attorney for an incident that they claimed to have happened a year or two before. So if you have video cameras, make sure that you have a backup copy and keep those records for at least a couple of years, if not more. Now, at the moment, the main culprit of rising insurance premiums is the very large increase in weather and climate related events. So the first half of 2021, there have been 8 events with the US or in the US with billion-dollar losses each. Catastrophic storm events are likely to increase due to climate change, and secondary perils are likely to rise as well. And when I say secondary perils, this is the aftermath from the event itself. These are the smaller to mid-size events or secondary effects, which follow a primary peril. So these may include events like hurricane-induced flooding, storm surges, tsunamis, fires following earthquakes, and landslides after heavy rain. So according to Deloitte, which is the world's leading risk management and consulting firm, the escalating frequency and severity of extreme weather-related events from wildfires in the US to record heat waves in Europe to the floods in Japan have shown a brighter regulatory spotlight on insurance risk and climate change. One federal regulator in the US went so far as to suggest that the potential damage from climate change could end up being as severe as the fallout from the mortgage crisis triggering the 2008 financial crisis. The purpose of this is not to scare anyone or convince anyone of anything, but instead to let you know what insiders in the industry are projecting and what the companies who set your rates are focusing their resources on. So you as responsible landlords can at least keep this in mind going forward. Now, don't worry, this is the only chart in the slideshow. This is a chart by NOAA, or the National Oceanic and Atmospheric Administration. They started tracking extreme weather events in the US almost 40 years ago. Since they began tracking extreme weather events, there have been 298 events that have met their threshold, exceeding a total of almost 2 trillion with a T in damages and costs. The frequency of these extreme weather events has been increasing. All 5 top years for the event frequency occurred within the past decade, and the economic costs from natural disasters have exceeded the 30-year average for 7 out of the last 10 years. And the number of extreme weather events across the globe has tripled since the 1980s, as you can see on this slide. These are slides, and this is data that insurance carriers look at. So I actually pulled this from an article from one of our top insurance publications, because I thought it was important to share. So as you can see, 2020 had the most frequent and the costliest extreme weather events of any other year on record. If you don't remember, July of 2021 was the hottest July on record worldwide. Now, the heads of the largest international insurance carriers in the world, like Lloyd's of London, Zurich, Munich Re, etc., have publicly stated that the effects of climate change have ravaged the insurance industry. I actually do have an article coming out in the next issue of Rent Magazine that will go into more depth about how the insurance industry as a whole views extreme weather and their opinion and approach to what they deem as climate change. So we won't go into any more detail about that here, but it is important to know that extreme weather events are difficult to predict and therefore difficult for insurance carriers to prepare for. But we do know that they are increasing in both frequency and cost, and unfortunately, that is a direct tie to your insurance premiums. So I don't know about you, but I have had a difficult time really comprehending how much a billion, let alone $1 trillion really is. So I found this visual representation that I think is very helpful, and hopefully this helps you too. So when I talk about billion and $1 trillion losses, like on the previous slides, I just want people to comprehend how much money has been spent on large disaster claims. So this silly little photo shows $1 trillion, how $100 bills would stack up. The first example is $1 million, which is a lot of money, we can all agree. It would reach the height of a chair. $1 billion would be taller than the world's tallest building. $1 trillion would be 2.5 times as high as the International Space Station. So I just think it's important to realize how much money it really is when we talk about trillion and billion-dollar claims. So moving on from that, the other factors are increased underwriter scrutiny, such as site conditions, maintenance, building updates, and building values and replacement costs. So underwriters do not want to pull up Google Maps and see something like this on the screen, unless of course you're fixing it up first. But this photo of a donkey in front of a rundown house is an extreme version of a common issue that we run into. Underwriters can be picky, especially the underwriters at top-rated carriers, the ones that are giving out the most competitive rates. They will not just insure any property. Especially over the last few years, the insurance industry has tightened up their requirements and their screening processes. And a lot of it has to do with how much money insurance carriers have paid out in claims. Yes, there are insurance companies, they are insurance companies and they do not have a wonderful reputation, and you are not going to hear me argue about that, but they are still a business and do have to make some sort of profit in order to insure your assets. So insurance carriers used to ask a lot less questions and used to allow buildings of any age, used to offer low deductibles, but that's just not how it is anymore. For example, one of the largest carriers for the habitational industry is Nationwide. They no longer accept any new rental dwelling or apartment buildings that are older than 30 years old, unless they can get written proof from you that the roof, any applicable HVAC system, wiring and plumbing have all been updated. They are not making any exceptions. A lot of other standard carriers are also following suit, and some are even going a step further and saying that no building older than 30 years is eligible for coverage at all. Lastly, and most recently, there has been a lot of scrutiny regarding the building values themselves. You probably have a policy that covers the full replacement cost of the property in the event of a total loss. You may have an actual cash value policy, but those are less prominent, so we're going to focus on policies based on replacement cost. Something important to keep in mind and to write down, especially for those who have the rental dwellings, is replacement cost is not the same as market value. While it's nice to know what you purchased your property for or what you think you could sell it for, that number does not hold any weight in the eyes of an underwriter, because that's not what insurance bases their rates on. If your policy is on a replacement cost basis, there isn't a lot of wiggle room on the valuation. Insurance agents use a tool to calculate the true replacement cost of a property based on building features like square footage, the type of construction, yes, the area, that counts too. They do tend to skew a bit high, but as long as the building information is correct, the number is more or less accurate than what it will truly cost. So I understand you may have a guy, you may be a good bargain hunter, but none of those are factors in the building valuation tools, so they cannot currently be used as justification for a lower building value. So yes, of course, it's a conversation I am always willing to have, especially if you are an investor and you're fixing up properties. That is completely understandable. But there are also built-in penalties, or there can be built-in penalties involved if you underinsure outside of your co-insurance range. And if you're not sure what that means, I'm sure we'll be doing another webinar and I can put that on the list of topics to cover. Okay, lastly, social inflation. There is an increase in litigation. We love to sue people in this country. That's not a surprise to anybody. Legal decisions are tending to favor the plaintiff. Compensatory jury awards, and there's also broader definitions of liability. For example, most liability policies will now include mental anguish as a covered cause of loss. So next, we're going to go over uncontrollables versus controllables. So something that's uncontrollable is the weather. Something that is controllable is how prepared you are for likely weather scenarios. Are you within 3 miles of the coast? Are you in a flood zone? If you don't know what storm mitigation features your building may be equipped with, like special storm resistant shingles, roof deck attachments, secondary water resistant barriers, etc., then either check your old inspection report or get a new inspector to come out to let you know what you have. Do not wait for a hurricane to come through before you find out that you don't have storm rated shingles and your roof blows off. Okay, an uncontrollable is the litigious nature of the United States. According to classaction.org, the US is the #1 country in the world for the highest litigation costs. This has negative consequences for those who depend on companies that include defending lawsuits as one of their services, which is most all business owners. What is controllable is prioritizing property and grounds maintenance. This is something that is fairly inexpensive and absolutely encouraged. We'll go over specifics in the next section, but this is always something that you can at least mostly control. Something that's uncontrollable, tenant caused damage. Something that is controllable is you requiring renter's insurance or carrying a master renter's insurance policy. I've heard some people are not really enforcing renter's insurance, and I honestly cannot think of a good reason to not do that. I understand that it may be a big hassle and you may think you lose prospective tenants from requiring it, but this is a cost benefit analysis that weighs heavily in benefiting you. So an uncontrollable is the age of buildings, but a controllable is updating old building features and systems. So if you aren't sure what's inside your walls and your foundation, I highly encourage you to get an inspector out there so they can tell you what you have. Lastly, uncontrollables, crime. But what you can control is setting up safety features such as lighting, door fobs, security cameras. I know it can be cost prohibitive for most people to put up a gate around your properties, but there are some low cost options for you, such as getting door fobs for multifamily buildings, putting up security cameras, making sure you're using proper lighting, and installing fire alarms. So next, I think it's important that I shed some light on input from experts, and by experts, I mean underwriters. Underwriters are the people at the insurance companies that say yes or no to whether or not they will cover your risk, and they're also the ones who, within reason, set the price. So some advice from underwriters. Underwriters also don't interact with clients directly. They only deal with agencies, and we are the ones who then relay the messages and also push back if need be. So they will take your submissions, they view them, and they do their research accordingly. But I can tell you it is always the underwriters who are making us, the agents, ask the pesky questions about your properties, such as when was your roof last updated? So during these times, I just think it's important to pull back the curtain and give you the firsthand advice from underwriters. It's going to be very beneficial for those who want to know what the people in charge of offering your coverage determines pricing for your policies. Now, I did make sure to specifically ask about methods that would not cost a lot of money, since the whole point is to try and save money. So that's what we're going to focus on here. So first up is nationwide. The nationwide underwriter said tenants should always be required to carry renter's insurance. That was his first piece of input. Why? This creates a liability barrier between your policy and any claims that might be the tenant's fault. Your policy should not be the primary for a tenant who has a guest over and they get drunk and one of them decides to jump out of the window. Yes, unfortunately, that is a real life example. Keep the tenant's liability and what they are responsible for defined by requiring that they carry renter's insurance. This is now expected of all standard insurance carriers. It is no longer something that you get a discount for doing. It is just expected that you make sure that renters carry their own insurance. If they do it on their own, if they couple it with, if they have, their own auto insurance, it can cost as little as $8 a month for them, and it is absolutely worth the cost, especially when they get coverage for their contents as well, especially if, in a case of fire of theft or any other cause of loss. And all you would do is make sure that they add you as the landlord as an additional insured. So if their policy cancels, you also get notified. Keep the property well kept and looking clean. Underwriters will look at photos of the building. If there is peeling paint or a heap of trash in the front lawn, they're going to be less inclined to offer coverage because they expect you to keep your property in good order. Please comply with loss control. It's a free service. You don't want to make claims and we don't want to pay them. At least they're honest. Take our feedback and do what we ask. If you don't, we hold the power with pricing. So yes, some of the inspection recommendations I say in quotes because usually they're not recommendations, they're requirements. They can be very annoying. Some of them don't make any sense, and your agent should be able to tell you how valid an inspection recommendation is, but be prepared to make any adjustments if something is deemed as dangerous because it can save you money in the long run. And lastly, don't jump carriers every year. Underwriters see that and they'll assume that you'll leave them again next year, and they won't bend over backwards for someone who will probably just leave them again next year. So think of it like a resume. Next, this is input from the head underwriter at AIC, Apartment Insurance Consultants. Make repairs before they get worse and more expensive. Get ahead of the problem. Slip and falls are a huge issue with apartments, which we've already reviewed. So make maintenance a priority. We've already talked a lot about the importance of maintenance, but something else I want to make sure everyone aware of is that insurance policies do not cover general wear and tear. They cover sudden and accidental damage. So if you're counting on an insurance company to cover the cost to replace your roof that's leaking due to wear and tear, that is something insurance companies will require you as the owner of the building to properly maintain. Tenant happiness seems to be what keeps claims down. That part seems logical. Along with that, have a good group of renters and make sure you're screening everybody. Okay, lastly, from Middle Oak, keep a trip and fall hazard log to keep track of what areas in your property are causing issues. So we have sample hazard logs that can be provided to you. You just reach out to me and I can send them to you. You should not allow smoking in any of the buildings, and no grilling should be allowed on patios or underneath overhangs like roofs, porches, and decks. Only allow areas away from the buildings to be used for grilling. I think this should go without saying, but cigarettes and grilling both involve flames that, if not properly put out, can and have turned into devastating fires. A point to go along with this, if you have pine straw, make sure it is not touching any part of the building. Pine straw is extremely flammable, and one flick of a cigarette can cause it to burst into flames. Trim back tree limbs if they are close to or hanging over roofs. Not only can overhanging tree branches snap and collapse onto a roof or a person, but it can also provide easy access for unwanted critters to access your roof and go into your attics. And lastly, look at increasing deductibles because it does tend to help with reducing premiums. However, unless you make a big jump, from, if $1,000 to a $2,500 deductible, you're not going to see a huge decrease in premium. But if you make the bigger jump from, let's say, 2,500 to 5,000, you'll see a bigger difference in premium. Same with the 5,000 deductible to 10,000, you're going to see better pricing. Now, next is additional advice from me based on years of reviewing inspections, loss reports, going out to view buildings, and also conversations with various underwriters and loss control departments. Look at investing in central station or local fire alarms. Central station fire alarms notify the local fire departments directly if an alarm goes off. No one needs to pick up a phone. So if it's in the middle of the night and no one's awake, the fire alarm goes off, the fire department knows about it. I know there's some downsides and there can be false alarms, but the overall consensus is those false alarms are getting better. There's also local fire alarms. Local fire alarms just make a lot of noise. They alert tenants that there is a fire and to vacate the premises. Also look at security cameras. Having full access to what is going on around the exterior of your property is extremely beneficial as a landlord, especially if you're in an area where you're somewhat concerned about crime. Burglar alarms. I know generally speaking, tenants are the ones who are in control of whether or not they want to activate a burglar alarm, especially for apartments. But if you have single family rental dwellings, it's worth looking into. Lastly, and arguably the most beneficial, but also the most expensive option is installing a sprinkler system. This provides the biggest discount to insurance and in the result of a fire could prevent a total loss. However, I am completely aware that installing sprinkler systems is not financially possible for a lot of landlords. So it's just something to look into, something to think about, especially if you're looking to do some renovations. Something else is please check all electrical panels and wiring to make sure they are up to code. I am not an electrician, but I've learned a lot about electrical systems based on a slew of claims and of inspection reports. So first, as a quick review, what do electrical breakers do? They prevent circuit overload, short circuits, and external power surges from coming into the electrical panel. And if an overload does occur, the breaker's job is to trip and shut down the power to the overloaded circuit. The circuit breaker acts as a safety net, helping to prevent electrical circuits from overheating and catching fire. All standard insurance carriers will say the following is now unacceptable for coverage. Any sort of Federal Pacific or Zinsco breakers. These, Federal Pacific breakers were used in buildings built between the 50s and the 90s, which is a very popular time frame for a lot of rental dwellings. So if your property was built during that time frame, just make sure that you do not have these panels, because during a national investigation by the Consumer Product Safety Commission, 51% of the tested Federal Pacific breakers failed to trip, so failed to do their most important job of protection from electrical surges, and therefore create a substantial risk of fires. So Federal Pacific breakers cause an estimated 2,800 fires every year. Please don't let your property be one of them. Now with Zinsco, that brand of panels was most popular in the 1970s. Their circuit breakers often melt and prevent the breaker from tripping. So Zinsco panels were also rebranded under Sylvania or GTE-Sylvania. These panels have the same issue. So bottom line, make sure your electrical boxes are up to code, and if they are not, your main priority needs to be replacing them. Aluminum wiring, this is something I've talked about before and you're likely very familiar with, but it was mainly used in the late 1960s to the early 1980s as a cheaper replacement for copper wiring. The issue with aluminum wiring is that it expands and contracts at a high rate, which can loosen connections. And aluminum is a lot softer than copper, which makes it more likely to break and create hot spots. The connection points are the main issues. So a common remediation method is known as pigtailing. And that means that they you tie in aluminum wires to new copper wires at every place where wires begin and end. The aluminum and the copper wires are connected together with a specialized connector. Unfortunately, fewer and fewer standard insurance carriers deem pigtailing as an acceptable method of remediation because it requires every single receptacle, switch, light fixture, and junction box needing to be pulled and rewired. And that means that there is a chance that a connection point can be missed. And it only takes one aluminum wiring point to fail in order to spark a fire. Unfortunately, the consensus, mostly among electricians, is to remediate aluminum wiring by replacing it completely. If you are looking at other properties to invest in or to live in, for that matter, make sure that during the inspection, you take note of the type of wiring and electrical panels that exist. Any inspector will tell you what is and what is not up to code. You can also use that as a bargaining tool. If they have Federal Pacific panels, you can say, you know, we're only going to buy this if you update the panels to meet code, or you have to drop the price because you have to incur the costs of replacing the panels. But expect to pay more for coverage until that wiring issue is replaced. If you're not sure what you have, it is absolutely worth the $150 or whatever to get an electrician out to tell you what you have. It is absolutely worth knowing. Lastly, the next time you have to renovate or update any of your buildings, think about and look into green updates to the buildings. So many insurance carriers have started providing discounts on premiums if you use green materials to rebuild after facing a claim. The National Association of Insurance Commissioners put out this as a suggestion to carriers to incentivize people to use more green materials. Not all carriers offer this discount, but expect these discounts to be becoming more common in the future. All right, so other important things to keep in mind. You need to keep track of what year were these last replaced? The roof, HVAC, if you have HVAC system, which is air conditioning, wiring, and the plumbing. So some building features make properties ineligible for standard market coverage, which means you'll pay more. The older your systems are, the more issues will likely arise, and insurance carriers pay attention to this and will price your premiums accordingly. Every single person I work with that owns any sort of habitational exposure knows that I have to ask you when the roof, HVAC, wiring, and plumbing were last replaced if the building is older than 30 years old. So every carrier asks about this. It's not something that I choose to ask. It's something I have to ask. So that's something to be prepared to answer. Just a year, not an exact date. The reason is to make sure the property has been properly maintained or updated as building codes and ordinances have changed. The more information you can provide about your properties, the quicker and smoother the overall insurance process will be. Also, make a plan. Prioritize maintenance based on need and make a maintenance schedule and stick to it. If you have a property manager or you don't, either you or them should be regularly checking on your properties. Tenants are not afraid to tell you what's wrong, so spin that into a positive and use them as a resource. Also, a pro tip, before you buy a property, make sure you ask them for 3 years loss runs from the current owner. As long as they're clean, it will help with premiums, because what loss runs do is show any claim that has been turned in to the insurance carriers in this whatever period of time, usually 3 years. Sometimes carriers will ask for 5 years now. You can also use that as a bargaining tip, because if it's not clean, then you can say, well, I'm going to be paying more in insurance for this, so we need to drop the price. You can spin it both ways. Next, pandemic insurance. So when is it coming? Insurance products come after an event triggers the need for such an insurance to exist. For example, cyber insurance was established in the late 1990s after the tech boom. Active shooter insurance, which is awful, it was established in 2017 after the rise of mass shootings. Abuse and molestation insurance was established in the early 1980s after highly publicized scandals. Employment Practices Liability, or EPLI, was established in 1991 for smaller businesses after the Civil Rights Act of 64 and 91 and other previously established laws. TRIA, which is the Terrorism Risk Insurance Act, was enacted in 2002 after 9/11. So TRIA helped provide terrorism insurance by mandating the offering of terrorism insurance payable through funds provided by the Treasury. Now, more recently, a model of the PREA draft bill, the PREA discussion draft, has been circulating through Congress. It was introduced in June of 2020. The PREA discussion draft very closely mirrors the TRIA and requires participating insurers to make available insurance coverage for a covered public health emergency, which includes any outbreak of infectious disease or pandemic on terms that do not differ materially from the terms applicable to losses arising from other events. Because it's in the government's hands, we don't know when that's going to come to fruition, but it is out there. There are going to be options, hopefully in the near future. All right, so is there anything else you can do? You can shop. You are likely to find lower rates, especially if you have not shopped in a while. And by a while, I mean a couple, 3 years. The worst case scenario is you already find out you have the best coverage and premiums out there. Recommendation, keep it to 1 to 2 agencies. Any more will be overkill and they will all block each other. So 2 agencies maximum when shopping should cover all the bases. Some key takeaways. Prepare for the probable weather-related events in your area. Prioritize property maintenance and upkeep to keep your rates down and reduce potential claims. Require your tenants to carry renter's insurance or carry it for them. Make sure you have an agent that is knowledgeable with your industry and is shopping you around as the market changes. Next is how to reach me. If you have any additional questions, are interested in a policy review from my team, or would like any quotes from our agency, you can reach me via phone, text, or email. We understand all of you currently have your own agents, and I know some of our clients are listening right now as well. Hi, guys. It's very important that everyone surrounds themselves with a knowledgeable team, so just make sure that your agent knows your business and the risk that comes along with it. So I urge you to look for specialists who do this type of risk day in and day out to make sure your company and assets are properly protected and to understand your risk. So
thank you. Thank you so much, Lauren.
Yeah.
So I put up this poll. It's a perfect segue here that if you do feel like you need that quote that Lauren was saying, it's been a few years and you want to shop, Lauren is a great resource. She'll probably be the one to help you. I think they have other people on their team too, but we'll send you over to her if you do want that. So I'll leave that up. A couple of really good questions came in.
Oh, great.
Yeah, actually, one of them from Hal Tran, and I hear this a lot. In California, earthquake insurance is very expensive with high deductibles. Should we have earthquake insurance? Is that something you recommend for Californians?
So that's a great question. And it's, of course, in an ideal world, yes, earthquake insurance is definitely something you should look into. However, I know that it is insanely expensive and it's not doable for a lot of people, which again is understandable. So if you can, then yes, I recommend getting it, especially in areas that have, higher seismic happenings than others. So just make sure that you're aware of the risks that come with your property. And if you're not sure, you can reach out and we can look at your specific property individually. But I do recommend it if you can swing it.
Great. Well, on that note too, so you mentioned sprinkler systems, right, which are pretty expensive. Dorian here is asking, as an alternative to sprinklers, would something like an underhood fire suppression system on the ranges give an appreciable discount?
Interesting. That's a great question. And it's funny because usually those are required at restaurants. Like for restaurants to be up to code, you have to have those. I have not yet seen that generates a discount, but I mean, if it were up to me, I would say yes, absolutely. Things like the fire stop on the stove,
Yes.
those are great. I actually have one for me because
Yeah.
I can be a little forgetful, but yeah, I think they're great. Unfortunately, I don't know of many carriers that are offering discounts for those systems. Usually it's a sprinkler system because it protects the whole building. And
Yeah.
that's where the big discounts come from, usually 10 to 15% discounts on
Well,
property.
I think the moral of the story here is even if it's not a discount, right, and it can reduce your own probability of having a claim.
Absolutely.
I mean, why
Anything,
not?
yeah, absolutely. Especially, like the hood systems, they might cost a little more. So if you can swing that, absolutely, that would be fantastic. But the fire stops, I think are around $60-ish. At least that's, I think, what I paid. And you could
Yeah.
get them in bulk, probably for less. And installing those is spending that amount of money to avoid a huge fire is absolutely worth it. I
Yeah,
agree.
we actually have a vendor that does it, which is called
Perfect.
Stovetop Fire Stop, quite literally.
I think
So,
that's where I got mine,
oh,
was through
good.
your website. I
Yeah.
just forgot the name because it has
Oh,
been a
wonderful. Yeah,
year. So
I dropped the link in the chat.
perfect.
So if anybody wants it, it's really affordable. And if you had to buy it in bulk, they do discounts too. So
Yeah.
still not a bad idea, even if the insurance carriers are a little behind on discounting for that. Who knows? They
Yes,
might discount in
absolutely.
the future.
Very true.
Mhm. So another question here about liability for their guests. Note we are not attorneys, but
Yes. Yes.
showing here, if you put that in the lease, right, that they are responsible for damages or physical liability to their own guests. I mean, the way that I look at it is ultimately, there's nothing that stops somebody from putting out a lawsuit against you, especially if they don't have renter's insurance to go to first. So even if you had something in your lease like that, they still could sue you. Then at that point, you would have to show quite definitely that it is not your fault. So it really puts you in a position where you're still going to have to defend it, even if it's in the lease. I don't know. Have you seen that, Lauren, with your clients in your experience?
Yes, and you kind of answered the question perfectly. One, yes, disclaimer, we are not attorneys. However, the putting something in your lease is not necessarily ever going to prevent someone from suing you. So especially in this country, you can really sue anyone for anything. So, I mean, I'm sure we've all heard of ridiculous lawsuits. They're like, how did this even happen? So when it comes to your property, it's ultimately your liability. And if you don't have any sort of protection that your tenants carry, it's going to fall on you. Now, whether or not the court dismisses or they don't find you liable, you still have to pay out a lot of money for the attorneys to even get to that point. So
Mhm.
anything you build into your contract first should always be reviewed with an attorney. But yes, and yes, of course, you can put it in there. But it's the same thing about dogs. Like if you have a dog that you say you can't have dogs, and then there's a dog and it attacks someone or hurts someone, just because you have it in the lease that you shouldn't have a dog, it does not protect you from being sued. You're still going to be sued. So much of the cost of lawsuits comes from having to defend yourself, whether you were in the right or in the wrong. So yes, you can put it in. I'm sure attorneys would probably agree with that, but please don't quote me on that. Ask your attorney. But still make sure that you're putting in safety mechanisms and things in place that are going to protect you and also protect your tenant, because your tenant has belongings that they need to protect too. If someone breaks in, I remember in college, I went to college in Memphis, and we had a break-in, and a whole bunch of my stuff was stolen. A whole bunch of all of our stuff was stolen. So my renter's insurance paid that out and made me whole again. So it's absolutely worth it, not just for you, but for the tenant as well.
Yeah, absolutely. And I think at the end of the day, the tenant's going to think, well, why? Like, I already got paid, so I'm good. Why would I then talk to my landlord even about it at that point? Okay, so another good question here about from Wei, will litigation in the process, so let's say there's no legal decision yet, would that affect a landlord insurance premium, or does it have to be like a closed case with a legal decision on it?
Good question. So it will depend on what shows up on your loss history. So those loss runs that I mentioned towards the end, if it most carriers want to see that claims are closed. They don't want to jump in mid litigation with another insurance carrier in place. So that's typically speaking. Now, if you have a good agent that can understand the full story and can communicate to the underwriters why that you should not take that into consideration, that this is a, this is a special case, that's something to at least have a conversation about. But generally speaking, carriers do want to see that it's closed before considering, because what happens is on the loss history, what it will list is what's been paid out and also the reserves. So if it's open, there will be a reserve amount, and usually the reserve amount is like really high. And hopefully the overall loss history, once it's closed, will show it lower, but they have a reserve amount set aside. So it's going to show like, oh my gosh, there's another $250,000 that could be coming. That scares off a lot of insurance carriers from wanting to jump on.
That makes sense. So from Jerry, another interesting question about security cameras and tenants tampering with them. Have you heard any cases like that where tenants tamper with security cameras, and what some landlords might be doing about that?
That's a great question. I actually have not heard of many instances of that happening.
Okay.
Especially, with apartments, if you can install it far enough away where you can view people trying to tamper with it, hopefully you can stop it in its tracks. But I have not heard of many instances of those happening. I'm trying to think of anything off the top of my head, and I can't actually think of any. It does not mean it hasn't happened. I'm absolutely sure it has, especially if they have renter's insurance and they're trying to commit some sort of fraud where a friend comes in and burglarizes them. But usually that's something that can be, police are good at their jobs and can hopefully find that out. But security cameras are certainly a deterrent, and that's the most important thing. You can't stop people from doing bad things all the time, but you can certainly do your part in making sure that you do everything you can to protect your property.
Oh, this is funny. Dorian, another person here on the webinar, just put in the chat that actually happened to him. And he said it was actually great because we had them on camera tampering with the cameras.
Right.
So
yeah, most criminals are not like the smart. You're not gonna have the smartest people trying to tamper with your apartment cameras, generally speaking. So you'll see them up there and you're like, how do they not realize that this is happening? So it's funny and it's sad, and but you're right that it's but hopefully that deters other people from doing it, especially if you can say there are cameras all around that.
Absolutely. I think it's a great deterrent, actually. We have another vendor. I bring them up because they're honestly have a great service, Galaxy Protection. They do remote monitoring. So not only do they have the cameras, but they actually have a person physically watching the cameras from another location. They don't have to be on your property. You don't necessarily have to have a security guard if you can't afford it, but to at least have somebody who's monitoring that and seeing what's happening could also be a nice addition to it, rather than waiting for something to happen and then looking back at the camera footage after the fact. So, if you are concerned about that, depending on the area where your rental is, or, you should kind of be able to tell if that's something you might want to have. It sounds like a great idea to me, if you are looking to avoid those kind of issues in the first place, right?
Yes, absolutely.
So another question here from Jerry about fire prevention. You mentioned that putting no grilling as part of your policies or procedures in your lease is a good thing. If a tenant violates that rule, then is the landlord still responsible for those damages, or is the tenant responsible or can renter's insurance help?
Yeah, so great question. Generally speaking, as long as you make sure they have renter's insurance, that's their liability. They violated the terms of the lease, and the renter's insurance should cover that. And yours would be secondary if something were to happen. So yes, you can. Again, this is an attorney question to see if that would warrant an eviction notice. I cannot answer that question, but if it's violated and something were to happen, then usually, as long as it was truly in the lease and there was no sign of it before. So if you see someone that has a grill on the patio, tell them to not to bring that inside or to leave it somewhere else, because that's something that inspectors also look at when they do rounds on your property. They definitely pay attention to whether grills are on the patio. So yeah, hopefully that helps a little bit. But as long as
Great
your renters
answer.
have renter's insurance, it should have provisions in there to cover. I mean, it's their liability that they
Yeah. And I think you mentioned too, the landlord can actually pay for the renter's insurance at their own cost, because at the end of the day, it is fairly inexpensive. So, if you're looking at that versus the cost, which is, pretty minimal, versus how much it could cost to replace all of your tenants' possessions, like thousands and thousands of dollars. If something really bad happened, it's like, why wouldn't you?
Right.
Okay. So now here from Way, another question. I
Sure.
have a newly acquired multifamily that has an unpermitted space that got converted into a living space. And there's a long-term tenant in there. They don't want to move out. Can insurance handle this situation?
So insurance is likely not going to be your first stop. Your first stop is going to be an attorney, and also probably your just local government, because if you buy a building and it's unpermitted, it doesn't really matter what the tenant wants to do. It matters what the law is. So if you report that to the authorities, then they should be the ones to take that over. Insurance only really covers if there is a loss, a true loss. It's not necessarily just the illegal activity. So there has to be an event that triggers insurance coverage. So insurance is definitely not going to be the first stop you make. Yeah.
Okay, Dorian coming in with a comment. He says, in San Francisco or New York City, there are programs to make illegal dwellings legal. With some inspection process. So who knows? I mean, it really comes down to city by city and what is in their code, what's permitted, what's not, and how they handle it ultimately. Because I know some of these cities that are very tenant friendly, they might be looking to, how do we keep the tenant right where they are? And there are other places where maybe that's not so much the priority, and it's like, well, let's see if it's unsafe first.
Right.
Okay, so from Eloy Pando, should the renter's insurance name the property management company or the actual owner of the building as an additional insured party?
Good. Both, if they can. If the property, now, property managers sometimes also own the properties, so sometimes they're one and the same. But if you have both, talk to your property manager, but it should list you both, because if you're the owner, most of it's going to fall under your responsibility. Even if you hire the property manager, of course, that's going to depend on what's in your guys' contract as well, but it should not be a problem, and it shouldn't cost anything to add both of you.
Yeah, and definitely look into also establishing like an LLC for your business if you are an individual owner, rather than having it in your personal name, because then your personal assets are more at risk than your business assets. So you don't want them to come over and get your personal stuff first. So having some sort of barrier there is probably a good thing. Plus the property management company, obviously. So great advice. I think that we've covered a lot today, and we, I think, have got all the questions done too. So great job. We're right at the hour mark. This couldn't have been more perfect. Thank you so much, Lauren. For those of you on the call, I will be
You're very
sending
welcome.
the recording to you tomorrow, and you can review this and the PowerPoint slides, and I'll put you in contact with Lauren if you need to reach out to her. We'll give you her email or phone. So if you didn't write that down, that's okay. We have, speaking of codes and whatnot, we have another webinar coming up for California landlords. If you are in California on October 26th, we're going to be talking about a new building code that is requiring balcony safety inspections. And if you
Yes,
don't get them done, you could be in trouble. So that's coming up soon, very related to what we're talking about now. So I hope to see you if you are in California, you are a landlord in 2 weeks. I'll go ahead and log off now. Thank you, Lauren. Have a wonderful day.
You're so welcome. Thank you for having me.
No problem. Take care,
See you
everyone.
later.
Bye.